Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
All right, welcome to another episode of the Global Investor Podcast. I'm your host, Charles Carillo, and today we have Seth Ferguson, who is an 11-year real estate veteran. He's a co-host of Purchase to Profits podcast, where he interviews successful real estate investors and is also the host of a cable TV real estate show. Seth published his first book, Sell for More, in 2018, and he has a second book that's going to be released in 2019. And Seth, give me a little background. I know you're based outside of Toronto. And how did you go from, get into investing, real estate investing?
Well, I started off in real estate in residential sales. So at the time I was doing, I was trying to make the NHL as a hockey referee, believe it or not. So traveling all over the place and selling real estate seemed like a good fit, where the schedule was flexible so I could travel, still sell homes and do the games. But I realized after a couple of years that I had a few clients where they were, they had acquired a number of homes and, they seemed to be just thinking about real estate in a different way. And, I was making what you would consider good money at the time. I had the nice house with the pool with the waterfalls in it. Yeah. I was driving a nice car, going on these nice trips. But I realized that, I hadn't accumulated any assets. So whenever I sold a home, the commission was good, but then the cash just went out again and I wasn't building anything. So you start acquiring some properties. And at the time, I didn't really know anything outside of, what I was selling, which was single family homes. So it was a natural fit for me. I acquired, a number of single family homes, did a duplex conversion. And this was in the Toronto market, which is one of the craziest markets right now in the world.
Right.
The average price right now, I was looking at it the other day, is like $850,000 is the average price. Which is pretty ridiculous.
Yeah.
And, so that's, there's some challenges that go along with that because it's not a cash flow market. So your whole strategy has to change. Whereas, if I'm investing in a rural town in North Dakota, chances are it's going to be a cash flow market.
Yeah, that's great. Yeah, because it's one of those things where you make the sale and then you're restarting it again. And I remember that when we were flipping houses, it would be the same thing where it's great. You've made your money and then Monday you're back to work. So it's one of those things that's great. Now, when you're doing real estate sales, do you keep that license? Are you still, I imagine?
Yeah, I have my license still. I have a group of awesome clients that I've worked with over the past 11 years now. So they'll call me, I'll help them out. But right now my main focus is on the investing.
Oh, that's great. So what was one of the determining factors to go to multifamily if you started you started with rentals and single family? What was the reason for going to multifamily?
I learned after the fourth property that banks don't want to lend you any money on single family. They want your arm, 2 legs, your firstborn child, and rates to everything after that. And especially when you look at the lending environment, this was in Canada, that was with the single families. And the lending restrictions are a lot tighter in Canada than they are in the States. Pros and cons to it, but it's very tough to get financing, especially like I mentioned before, Toronto is not a cash flow market. So, when you're looking at, at your income on paper and your portfolio, even though you're accumulating the equity through appreciation, the cash flow doesn't really balance it out, and
right.
It's tough to get financing. So what happened was my son was born, and I realized it was, I'm not sure if you have kids or not, but when you're, or not that you know of, right? But my son was born, you hold your child for the first time, and as a new father, I just had that that desire or that need to be better and do better for my son. It was a really weird experience holding him for the first time, and I knew that I had to scale my real estate investing a lot quicker and a lot better than I was doing it. And multifamily seemed like a really good fit.
Yeah, that's interesting that you say about the banks, because that's one of the things that we have for properties I have in the United States personally, and they're smaller multifamily. And then we have an 81 unit that's under contract right now outside Tampa. And it's amazing how the lending criteria for what's underwriters looking for on a 5 unit that I refinance compared to now on a portfolio. It's amazing that it's not that much on you. It's more on the property, and they're worried more about how long your leases are written than what you made last year.
Well, 100%. And this is a big message I always try to get across from people. So don't think small. Everybody thinks, oh, well, I want to get into real estate, so I'll buy this one house and rent it for X amount, and then I'll buy a house every year for the next 20 years and I'll retire.
Right.
A bank does not want to lend you $400,000 for your mortgage. Sure, they do. They have that arm of the bank, but the bank makes their money on the $10 million loans, on the $20 million loans, right, where you're dealing with an actual the larger multifamily properties. It's a business. Yeah. But when you think about it, your tenants are your customers. You have professional management. It's cash flowing. If I'm a lender, I want to lend my money on those types of assets rather than just a single family home.
Yeah, the risk is much lower, and also you have a loan originator that's pushing that through, and they're getting their cut on that too, and they're going to be more likely to push through your $10 million mortgage than it is for your $100,000 turnkey house that you're financing or whatever you're doing. Yeah.
100%. And if I could go back in time, and before I acquired my first rental property, if I could go back in time and say, Seth, this is Seth from the future, don't do it. Think bigger, because I got into the single family homes because I just didn't know any better.
Right.
I think it's people will make the right decision as long as they're exposed to the information. And even when I'm talking now with potential investors, most people don't know about the benefits of real estate. They've never heard of depreciation. They've never heard of the tax benefits and all that stuff. So it's really it's educating other people so they can make the best decision for themselves.
Yeah, that's partly it's kind of right into where we're going with this. If now you're raising money currently for projects with your capital group, Alba Capital. Now you are raising for properties and projects in Canada and the U.S. or just in the U.S.
Yeah. So right now I'm concentrating on Houston. I really like the Houston market. There are some really good Canadian markets, but again, I mentioned in Canada, your two major markets are Toronto and Vancouver. And right now for multifamily, the cap rates are ultra compressed. It is ridiculous. And different strategy. I prefer the value add strategy for multifamily. So I think there are markets in the States that are a lot more conducive to that than some pretty hot markets in Canada.
Now, when you're raising money for your deals in Houston mainly, are you bringing Canadian investors in? Do they usually come with you from your book of business, from being in sales and stuff like that in Toronto?
Yeah, well, it's interesting because I found that the relationships I built selling homes and the relationships you build with from sophisticated and accredited investors, they're not the same. A lot of my clients selling their homes, they don't meet the criteria of an accredited investor. So it's almost like building a totally different database. Yeah. Going into it, I didn't really realize it would go that way, but it's two totally different groups of people.
Yeah. Did you have investors that you were selling when you were selling single family properties? Did you have investors that were doing that? And how were they making money, or is it just on appreciation when you're back in Toronto selling? Yeah.
So the market, it's really based on appreciation. So if you can acquire a property and be cash flow neutral for your first year, that's a great buy. So I interviewed a guy named Chris Gray from Australia. He really amazing guy, but in Australia, it's the same kind of thing. For some reason, Australians think when they rent out their property, they should give the renter an extreme discount and actually take a loss on the cost for owning the property. So very similar strategies in that way. And, you just have to have a different toolbox in investing in that type of market.
Right. That's very interesting. What kind of projects are you involved with right now, or that you have closed over the last few months in Houston area?
Yeah, so I was looking at a 160 unit property. Didn't go ahead with that one. Just so everybody's clear, I have not closed my first deal yet.
Okay.
So I'm actively hunting. So if somebody has a great property in Houston, give me a call. Ready to rock and roll. But I am ready to rock. Right now where I'm at, it's underwriting properties every week. Mm-hmm. Building that deal funnel. Looking at all the deals, and I am ready to pounce whenever I find the right property.
What's your criteria for properties you're looking at?
Yeah. So again, I mentioned I'm of the value investing mindset. So I'm looking for a property 1980 to 2000. Right. Value add component, not a super heavy lift with the renovations. I'm not afraid of doing the renovations, but let's say it needs a total overhaul, redo. That's probably a little too labor intensive for myself. Operational value add, going in with some better management. I have some great contacts with some really solid property managers in the area.
That's awesome. So it's mainly the Houston area. Have you looked at any other areas through Texas or anything like that?
No, and I understand a lot of people now, just where we're at in the market cycle. So we're in June 2019 right now when we're talking. The market's pretty tight and it's hard to get deals. So I know a lot of people have expanded their geographical area because it's hard to get deals that pencil out. My mindset is, I want to go in and I want to know a market like the back of my hand. I don't want to build in that market. I did a lot of research on some markets out there, and I chose Houston for a number of reasons. But so I want to focus my business there, dominate there, get really good at it, and then branch out, once I've acquired, 3 or 4 properties in the area.
Now, when you're looking, because of obviously you find one of the properties, only one half of it, and now you have investors for the other half of it. Where are most of your investors that you're finding? Are they Toronto? Are they Canadian?
Yeah. So, very good question. So of course I'm meeting with a lot of Canadians. Now, structure wise, you have to be very careful. And this is a really good message to somebody who is in Canada investing in a multifamily deal or any type of commercial real estate deal in the States. If the deal is set up as an LLC, you are going to get double taxed. You are going to get banged twice, once by the IRS and once by the Canada Revenue Agency.
Has to be LLP, right?
Yeah, you have to go in as an LP, 100%. Just because the way the CRA, so the Canadian IRS, thinks about it, they don't have something that equates to an LLC. So they say, well, we don't have anything similar, so double tax for you. On the LP side, they do have, there is something that's very similar, so you're allowed to flow it through.
Awesome. So I imagine if you were raising money and bringing it to another syndicator, another sponsor's deal, you would have to obviously tell them, hey, this has to be LP. It can't be an LLC.
100%. And I know LLC is the most, most people just go to that structure by default. But I do know a good number of syndicators that are doing deals in an LP structure. So it's just, again, it's just educating yourself. So if you are a foreign investor, you have to know, the tax laws and all the different entities and all the pros and cons before you put your money in a deal.
Now, are you, when say a Canadian investor comes to you and they're interested and they're on the sidelines until you find your property, are you putting them together with, say, a CPA or a lawyer in the United States that will kind of help them guided them through the process, or?
Yeah, well, 100%. So, we mentioned, finding the deals only half of it. The other half is finding capital. There's a totally different part where your support structure and that team that you've built. So, I've got a couple really solid syndication lawyers who are able to answer any question somebody has. I do have a CPA who's very familiar with cross-border investing. So again, able to answer any question that anybody has. So from a capital raising standpoint, you need to make sure that you have all the answers an investor can come up with. Because let's say if I'm putting my money in a deal and I ask a question and the person doesn't have the answer or can't get the answer, chances are I don't want to invest in them because they haven't done their homework. It's all about being prepared.
Yeah, and there's so many different facets now dealing with, it's not just, hey, US LLC, you're investing into this deal and it goes from there. Now and especially now the cross-border thing, and you want to make sure that you're not getting, everything. So many different parts of it that come out when you're crossing the border there. But that's interesting. That's awesome. So have you had any hurdles with any of your investors that you've had kind of set with soft commitments or anything like that say, well, this might be an issue for me when I speak to my CPA, or anything like that? Any issues that you might foresee that?
Yeah. So whenever I'm having that initial investor conversation, I don't really do much talking. I do a lot of listening, which I think is one of the keys to successfully raising capital. I would say right now, one of the concerns is the Canadian dollar is garbage compared to the US dollar. There's about a 31% premium that you pay. So it's, I wouldn't call it a hard objection. It's just something that comes up in the course of the conversation. Hey, if I'm putting in $100,000, I actually need to put in $130,000. It's like, yes, that's true. But let's talk about your return on that money within this 5-year hold period, how this deal pencils out. And, it's always important to be cognizant of, exchange rates fluctuating during that hold period. So it's just working it out with the investors, saying, hey, these are the deal fundamentals. This is how it's penciling right now. Even if the exchange rate changed, this is still a good deal, and this is why. Okay.
And is it pretty easy? I've never worked with Canadian investors before. Is it pretty easy getting funds? I imagine it's not an issue getting them into the United States when you're funding.
Yeah, the tax treaty makes it easy. I've never dealt with international investors, but Canada and the U.S. have a very, it's not, tax law is never easy to understand, but it's a pretty good tax treaty that goes back and forth.
Yeah, the only thing that I understand from a syndication lawyer that I was speaking to before is the main thing is the LLC and LP thing. That has to be, that's huge. So give us a little information on your books and your podcasts. Purchase the Profits, and then also you're a cable TV host. So I didn't expect that.
Yeah, so that show is called Real Estate Simplified. So it's myself and 2 expert guests, and we'll discuss. And it's not just that show is not strictly real estate investing. So we'll talk about we'll talk about development. We'll talk about investing. We'll talk about selling your home. So it's an all-encompassing show. So that's a lot of fun. Get to be on with a lot of great people. In terms of the books, my first real estate book was written for somebody looking to maximize their sale of their property. So it's called Sell for More: How to Sell Your Property for Maximum Value in Any Market. That came out at the start of 2018 now, $24.99. You can pick it up. And my second book is I'm in the middle of, putting the final touches on the manuscript. I've done about 150 interviews with successful real estate investors, lots of great people like you have on your show. And I noticed a lot of similarities or trends once I got speaking with a lot of them, they are successful for specific reasons and the things that they're doing. So I'm taking all the lessons I've learned from all those interviews and putting it into a book format.
Awesome. And so That's great. And when do you think that'll be out? That's going to be
Yeah,
later this year?
towards the end of the year. Once the manuscript's done, it goes off to the editor, then it goes through all that stuff. So probably the end of 2019.
That's awesome. That's really exciting. The how did you get involved with your TV show? I mean, the podcast. I understand. I mean, I've listened to it before. It's great. How for the TV show, and where does that? And that's in Toronto. That's in Toronto.
Yeah,
That'd be okay.
yeah. So unfortunately, your American audience can't see me in action. But how I got, I had filmed a couple short segments about 5 years ago, and I had a life change, and I reached out to the station and said, hey, listen, like you guys said you wanted to do a real estate TV show. Is the offer still open? And they're like, yeah, let's do it.
Oh, that's awesome.
Yeah.
That must have been great for business, for what you were doing when you were selling real estate and stuff like that as well, I imagine.
Yeah. Well, the show launched this year. So
it just launched this year. Okay.
Yeah, it's still relatively fresh. But it's been awesome. It's a lot different than podcasting because like you've got all the super bright lights and they've got like 3 different cameras and all that stuff instead of just like the one webcam, but it's a lot of fun.
That's awesome. Well, that's great. Well, Seth, I really appreciate you being on the show with us. And what I'll do is how can people get in touch with you? And I'll put all the links for everything, including your books and everything like that in the show notes.
Yeah, the best way to get a hold of me is through my website, sethferguson.org. Don't go to .com. It's an evangelical preacher guy. So sethferguson.org. And you can also just Google Purchase to Profits. We're on YouTube, iTunes, Stitcher, you name it, Google Play.
Okay, great. And then for your books, where can someone pick those up? Is that?
Yeah, but right now for your American listeners, just go to Amazon and search Sell for More. And I'll have to come back on your show once the second book is released, and then we can talk all about that.
Yeah, that'd be great. I really appreciate it. So, well, thank you very much for all the time today, and great success. Hopefully, you're able to find a property in Houston pretty soon, and you guys can get that started. We
are ready to rock. So it is imminent, but it's my pleasure. Thanks so much for having me on your show.
Thanks a lot, Seth. Have a great day.
Yeah.
Bye-bye.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.